All right, and we should be live. Hi, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vays, coming to you live as this market has just closed. A pretty important day, so I wanted to jump on a stream real quick. I probably could have done the stream an hour or two ago while the market was still open. I was already out of my trades. Maybe I'll start doing that in the future. Usually, I don't trade after 3 p.m. Lately, there's been a lot of action after 3 p.m. and I'm kind of in the market still, but not today. Today I was done at like 2 o'clock ish. So we're going to talk about that as well. Let me pull out your live chat. I may be able to get to some of your questions, and then we go from there. I'm going to close that. I'm going to move this, and I'm going to do that. Okay. All right. Waiting for your live chat to show up. Kicking off with 250 live viewers. That's great. We're going to go straight to screen share. Hope everyone's doing all right. Still in quarantine, of course. Hence, I'm able to bring you all these videos. I don't know if that's going to keep up. We're all going to find out together. Okay. So here's the daily chart of Bitcoin. And you know what? Hey guys, support with affiliate codes. I'm going to throw it out there in the beginning of the video for a change. All right. Love my Embly card. That's the one I pimp out the most. Okay. Now we can go to the daily chart as people are still trickling in. Look, that's the weekly chart. No good. Look, the daily chart this morning was working on a doji candle. I would have loved to see the doji candle close the day, but it has already reversed and went down because the Bitcoin market continues to be ultra correlated with the S&P market. Now, that's not a problem at all, but it needs to be properly understood. What we saw in this monster drop, look, Bitcoin topped around February 13th. And how much did Bitcoin fall since February 13th? Wow, I gotta raise my chart. Bitcoin fell and capitulated at a 63% drop since February 3rd. Now remember, February 3rd was not the all-time high. It wasn't even close to the all-time high. The all-time high was all the way, the all-time high was a while back, right? So this is where we go to the daily chart. Sorry, the weekly chart. Now, I'm going to do something weird, and people are going to be very confused. I am going to judge the top, the all-time high of Bitcoin, not to the bottom that took place in December 2018, but I'm going to do it over to the latest bottom where I call the end of the bear market. See, to me, the bear market ended here. The bear market didn't end there. This is the Tone Vays ending to the bear market. Is it possible that we're going to make a new low? The answer is yes. It's possible we're going to make a new low. I don't think it's likely, but it's possible we're going to make a new low. But there is a difference between a high in price and the end of a bull market. There's also a difference between the low price and the end of a bear market. This was the low price. Obviously, it was low, right? I mean, you don't have to be a genius to know that 3,150 is lower than 3,850. Obviously, this is the lower price. But when you add up the environment, the distance to the halving, even the stock to flow ratio that Plan B has made a career out of, right? The Lindy effect, that Murad always used to talk about. The longer something has been around, the longer it will be around, right? The fundamentals of the situation, the people's further realization that governments are trying to confiscate assets and being more and more tyrannical. like when you add all that up, an extra year and a half of Bitcoin for almost no price increase is very significant to me. Okay, so let's get back to my point, which I'm taking forever to get to. Bitcoin fell in total of 80% to the end of the bear market, not to the low, to the end of the bear market. Okay, and right here, Bitcoin, this is where the S&P 500 had its all-time high, right? Now let's go to the S&P 500 or the Dow, whichever, you know, you like. Oh crap, this again. Let's go to the S&P 500. When was the top? I hope it was around February 13th. That's the top. February 19th. The 9 came February 14th. Okay, there's weekends involved. So give or take a day, right? So do you see the correlation, the giant correlation? Bitcoin was technically uncorrelated to the stock market because Bitcoin has been dropping since Bitcoin topped in late 2017. Jesus. So Bitcoin tops over here with this top in the stock market. But then the stock market went significantly higher, but Bitcoin continued to kind of be in the dirt, right? And Bitcoin had a really good run. Notice how Bitcoin had a very bearish year all of 2018, and so did stocks. Notice how stocks bottomed in 2018, December 2018, and Bitcoin bottomed in 2018. I actually did not even notice that until now. I'm about to put Bitcoin, I'm going to tweet out another interesting chart. I'm going to put Bitcoin up here and I will put stocks up here because clearly Bitcoin has been very correlated to the stock market for a long time. Bitcoin had a huge run up in 2017 and so did the stocks. The stock market in 2017, let's cherry pick the low. Why not? I'm going to just cherry pick the low. Stocks were up 35% that year. Bitcoin was up, 1,000% or whatever, a few 100%, way more, right? Now let's reverse it. Let's flip this guy. In 2018, stock market fell 18%. Bitcoin fell 85%. Bitcoin fell more. Bitcoin fell more than the stocks did. Bitcoin also went up more, and then Bitcoin fell more. But here was the interesting part. Here's the really interesting part. By the way, I didn't pre-plan me talking about this. I'm kind of talking about it on the fly. So I'm processing the analyzation of this. I'm doing analysis at the same time as I'm doing a live stream. So this is not really pre-planned. Then we had a huge bull market in equities right into February. Well, first we had a bull market right into the summer, right into July, and Bitcoin did the same. Then we had another bull market right here into February. Now, Bitcoin also went up, but notice how Bitcoin didn't go up as much, right? So this was a bull market in stocks for 28%. And it made a new stock all-time high, but Bitcoin did not make a new all-time high. Bitcoin did well. It certainly crushed S&P by percentage because it had a very low bar to start with, but it never made a new all-time high. Then stocks, took a little bit of a dip, and then Bitcoin made its final high right here at 10,000 in February along with stocks. So let's shoot over back to the stock market, right? Stocks had a bit of a dip, coming out of the summer, not a big dip. But then, the S&P did another moonshot, and it tops at the same time as stocks do, right? And this is the correlation. And stocks obviously went up a lot by percentage once again because they have a very low bar to start with. And then the stocks dip big time. stocks fall 35%, Bitcoin falls more, okay? Stocks then rise quite a bit. We just had a nice bull market that ended today. Stocks go up 25% right here. And Bitcoin also does well. Let's go back to Bitcoin. Bitcoin does well. Now, the really important part is how Bitcoin topped with the stock market almost to the day. And Bitcoin bottoms on March 13th, while stocks, I know I'm not looking at them side by side because I didn't prepare for this. While stocks bottomed, when did stocks bottom? March 23rd, approximately at the same time. Approximately. And here's the big one. Here's the big one. I think that the stock market is in trouble. I think that we're going to go down. We're going to go down hard. I personally exited all my long exposure today. I was very upset that I couldn't get out at the open. It just happened too fast. And I did hold through this 9, but I did not cut bait on my longs. I did not take all the profit from my longs until this area here. This is where I got out of all my longs, and I am now skewed short going into the rest of the week because this end of the day was disastrous, and we're going to talk about why that is. Now, you can also see it with Bitcoin. I said it this morning that I am looking for a top in Bitcoin today or tomorrow. So it looks like it was today. I don't think tomorrow we're going to go higher. I don't see us going higher. We're going to get rejected by this 20-period moving average. Now, a lot of people watch me now, so I don't know how seriously they take it. They want a counter trend. They can do whatever the hell they want. They can talk about their analysis. Everyone is already talking about the rejection of the 20-period moving average. And I agree with them. It was always going to be a rejection. This is why the other day, when I saw the triangle breaking out earlier than I wanted, I said that, hey, this 9 coming in on Wednesday will probably reverse us, and there's nothing wrong with the reversal on the 8. We're still going to get our 9 unless Bitcoin price crashes down to 6,800 in the next 4 hours. We're going to get our 9 on the daily. And the big question is, will Bitcoin maintain its correlation with the stock market? And even if it does, how badly would it fall? And I am going to go on a little bit of a limb, and I'm going to say this is where Bitcoin starts to break its correlation with the stock market. It's not going to break it by a lot, but it's going to break it by enough. I believe Bitcoin is about to become a safe haven asset. I am fundamentally as bullish on Bitcoin as I was back in 2015 days. Okay, if I go to the monthly chart, right around here, after the Greek banking crisis, I became very optimistic about Bitcoin's future. And then we made this amazing ascending triangle to break us out. Now, this still took like almost a year. So like I said, the road up is not going to be easy. But right now, I am very bullish on Bitcoin. And even if we dip below this triangle, even if we dip below 6,100, it's fine. I don't think we're going to go below 6. I think over the next 2 months, I don't think the S&P 500 is going to, I don't think we're going to go into a depression. I don't think we're going to go into a depression. So therefore, because I don't think we're going to go into a depression, what's going to happen is Bitcoin is going to find a bottom. I got to send the message. Okay. I think it's because we didn't top on a 9, because we didn't go higher. Had we gone closer to 77 or 78, I would have expected the top of this triangle to be good support. Because we topped like at like 74, we can still come back into the bottom, like a little lower than this. It could also be just on a wick. It doesn't have to be at the close. I am looking for a pullback. I am still looking for correlation between S&P and Bitcoin. But I think there is a way higher probability that S&P is actually going to go and make new lows. I think there is a decent probability that S&P will give us a new low. Today's close, I believe, oh, I'm not sure what I just deleted. Let's bring that back, whatever I deleted. I think I deleted sequential. Meant to delete just that. We made it over to this Fibonacci line. We can, argue all day whether that Fibonacci line was the 50-period Fibonacci line that we didn't get to, or if I lower it to here, the 62 period that we didn't get to. I really wanted us to touch this line. I was really trying to get out of my all my long exposure around 2,780 on the S&P. I wanted us to just break that line a little bit, but I didn't get what I wanted. So I ended up with a pretty shitty entry of my bullish positions. I mean, still profitable, but nowhere near as good, obviously. And I still have my short exposure. So I am short going into tomorrow. I may or may not be short going into Thursday or the weekend. I mean, you take it day by day, right? I don't day trade. I take on positions early in the week with intention of holding them for a week or two. But when the market moves this much, you gotta immediately adjust. I mean, if you're not changing your mind as a trader, you're gonna lose all your money. I mean, it's every single tick, every single data point, every single 10-minute candle changes my outlook on the market, not only for the next 10 minutes, but for the next year. Every single tick changes the entire picture. And this is why anyone that points to the video from this morning about what I said is basically lying, because you always have to go with the last video. If you're not going by the last thing an analyst has said, it's irrelevant. It's irrelevant what I said this morning. What I said this morning, what I said yesterday, what I said a year ago, what I said 5 years ago when I did my first video. Everything prior to this video is totally irrelevant. If I don't talk about an asset, if I don't talk about gold today, then everything I said about gold this morning stays. But if I talk about gold today, then whatever I said about gold this morning is completely irrelevant, because I have already changed my mind, because I had another 8 hours worth of data to work with. Okay, that's how you have to understand analysis. All right, so here's the futures today. I love the bounce off the 9 with a reversal candle at the setup trend line, and I was bullish into here. I really wanted to sell like on a 9 here. I kind of, told in my Telegram group, which you can't get into. I'm sorry, like don't even ask. Only if you've purchased something from. Only if you have access to this indicator, you have access to it. Otherwise, you won't. I said when we were going up, and I don't usually talk in there. It's only the quarantine stuff. If I start traveling again, I'm going to stop trading again. It's hard enough to trade when you're concentrating all day long on trading. If you're on a plane, I'm not trading. So right here, to me, this should have been a green 2 because it missed it by 1 tick. And that means this would have been a 9, and it should have been a 9, and I should have got out, but I didn't get out, and then I kind of got stuck praying, and then I eventually cut bait. So I was very disappointed with myself because I knew I should have got out right there. So I got out late, lost a lot of my profit because I was very heavily into calls, which I then got rid of, and happy that I did, because I could have lost. This could have been a disastrous day if I held on to all of those calls. Cut them there. Anyway, let's move on. So here's the bigger picture on the S&P market. This is a disastrous candle. From a TA perspective, I think this gap is going to close. At a minimum, this gap is going to close. It can be closed on a wick. It could close in the futures market, but this gap is going to close. Okay. Ideally, I'd like to have it closed on a cash market. See this giant gap to the downside? This gap closed this week, but it made a gap to the upside. I now think this gap is going to close. Now, what does that mean? That means if this gap closes, it takes us very dangerously close, too dangerously close to the prior swing low, which is important. This arrow is way too thick. Let's change that. Okay. It takes us dangerously close to these lows. And if we go below these lows, and if we go below those lows, I believe we're going to go down. And the problem is if we go down below that line, we then get very dangerously close to the slope. Now, I don't believe breakaway gaps have to close. This gap doesn't have to close. But if we get below this red line, I believe this gap will close. And that means the S&P 500 is probably going to go and make a new low sometime next month. Okay, sometime going into the summer. I am really scared of this candle. I could change my mind tomorrow. If tomorrow we go up and we close above this Fibonacci line, I'll probably be a huge bull in the stock market, but I don't believe that's going to happen. Okay, look, I was wrong before. I thought that this candle on Friday was a very scary candle. And I thought we were going to open way down here and go down 100 points yesterday. That did not happen. We went up, and that's okay. Caught a lot of good traders by surprise. Probably a lot of traders like me expected down. It went up. This morning, I really thought we can go a little bit higher, but like I said on this morning's video, I was looking for a top to take place today or tomorrow. I am now 90% sure the top was today. So therefore, this is the dead cat bounce. And if that's the new high, I'll take the Fibonacci's back. I really wanted to just, line up the Fibonacci's. You put the Fibonacci's up here. Let's say we lined up. That right there is your 38%. But now your 38% is here. And guess what? That's the perfect gap close. So the S&P has one last shot. It has one last shot to avoid a disaster. And that is, do not go below this line, 2540. 2540 and the S&P is a line in the sand. You can look at the Dow, you can look at the NASDAQ, they're all going to be similar. Okay? That's it. That's a higher low. Now, if we bounce off of this line, that makes me a bull. We now have a swing high, a higher low, a higher high, a higher low. All we will need is one more higher high, and we're probably out. We're probably out of the woods. We can have a V-shaped recovery. I don't believe that's going to happen. I think that when the earning reports come in, and when the aftermath of this disastrous economic shutdown hit reality, that maybe people don't really want to go back to work and they can collect the unemployment checks, and a lot of businesses don't come back and don't open up, the stock market could have a massive hit. And it's not like the government can go out and print more money to support the stock market. That's not going to happen. So at this point, they're going to have to let it play out. And if it plays out, I think a new low is coming. Now, at the same time, let's go back to this Dow chart, which I don't know why always reverts back. Okay, so this is the weekly chart. This is the daily chart. As you can see, it took us many, many weeks to get back to this Fibonacci line. It didn't take us very long this time, okay? So this took, how much time did this take? 22 weeks, half a year, almost half a year, a little less than half a year, okay? About 5 months. Took 5 months. Okay. Now that's not what it took us here, right? We hit that line. We didn't do it in terms of time, but we sure as hell did it in terms of size. We went up to here. I lowered it to there and there. Not exactly sure why, but they line up. I believe now we're here. We moved quickly. I'm going to retweet this. And I'm going to say, are we here? All right, why is this not moving? Like that. Is that where we are now? Okay. We moved quick. And what happens next? Well, hopefully we move quick in the opposite direction too, right? Hopefully this low comes to us sometime this month. We're moving very, very quickly. So what took us one, I'll count the low, I'll count since the low day. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. What took us 11 days took 22 weeks, right? We did in 11 days what took 22 weeks to accomplish. So if we use that ratio, there's the ultimate low coming in. How many bars is that's going to be? A lot of bars, guys. That is 116 bars. Okay. We had 22 before. Now it's 116. So what's 16 divided by 20? 116 divided by 22. That's about 5, right? 5 times 22 is 110. That's 116. So let's say 5x, right? So this took, so now, and yes, I'm kind of making this shit up as I go. So now, if this took 11 days, 11 bars, multiply that by 5. It's about 55 bars. So when is that? Where is that going to come in? So if we go 55 bars from here, oh, that's blue, that's red. Cute. Where does that take us? Right there. That takes us there. That takes us over into late June. I think that's reasonable. I think late June for the bottom of this market is reasonable. Now, here's the worst part. Can we fall as much as the Dow Jones did back then? And this becomes, problematic. This fell an additional 80%. Wow. That is pretty disastrous. That fell an additional 80%. I don't know if I can stick that on this chart. I don't know if this will fit. I don't think it's possible for us to go down 80%. I don't see it. I don't see it. Remember, the world was on a gold standard back then. Okay. I do not see the Dow Jones going down to 2000. I don't. I think that's impossible. Technically nothing's impossible, but I don't think we can go that low. Where was the prior high? Oh, that's the daily chart on the Dow. So probably about 15,000. I don't see 2000, right? So you can see 15,000, right? Because 15,000 or like 13,000 is about where the 20, it's the weekly chart, right? That's about where, I don't want to change this to a weekly chart. I may have to though. I can always put it back. How come I don't have a weekly chart here? All right, I guess I'll do it here. I just want to see where the top of the old market was. All right, come on, give me data. I don't know why it's not giving me historical data. There it is. There it is. There it is. All right. I think this is the worst case scenario. What is that? That's only an extra 22%. What's the price? 14,000. I do not see it going lower than that. I don't. And one of the reasons why I don't see it going lower than that, speculation is speculation, but this was a different era. This was an era where there was no money printing. This was an era where you didn't have, the propping up of private assets. You didn't have a bailout. You didn't have the handouts of money. So therefore, I don't see how it's possible for the market to fall this much more. I can see this. I can see speculation driving the market down another 20% from the lows. But I don't think it's possible to go much lower than that. Like it's possible for, I guess it's possible for gold. Let's put it this way. It's possible for silver to go to $2. It's possible for gold to go to $100. It's possible. The reason why it's possible for gold to go to $100 is because no one has to care about gold. No, absolutely no one has to care about gold. I don't know how many times I can repeat that, right? 90% of the value of gold is speculation in gold, and maybe 5 to 10% is industrial use. So all speculation in gold can end. But the stock market is not 90% speculation. You may think it is. If you listen to gloom and doomers that always tell you that the stock market is going to fall to zero, they'll tell you that it is, but it's not. The stock market is a representation of the economy. And as long as there is some economy going on, right, there is always going to be fundamental value. Like when the Bear Stearns company dropped to $2 a share, the building that they owned in the center of Manhattan was worth more than their stock. So Jamie Dimon kind of says, I'll move into that building. I'm going to buy it on the cheap because the company has assets and all of a sudden I can buy this company on the cheap, right? So speculation can drive companies lower than their worth, but they have a worth. There is, fundamental, this is capitalism. There's fundamental value in the stock market. And the fundamental value of the stock market is significantly higher than the fundamental value of gold. Now, granted, because gold doesn't produce anything, the stock market is a reflection of people's innovation. The stock market is why you are able to watch this video, okay? I've been a little critical of Zoom. Zoom is part of this. Google is part of it, right? TradingView is not a publicly traded company, but it's part of it because I'm using their charts. The broker that I trade on is part of it. All of that is a reflection of the value in the stock market. So when you stare at your computer screen, think about how much value you're getting from a capitalist society where people build innovation. And then think about how much value you're getting from the existence of gold. And the answer is not much, right? Yes, gold, on a gold standard, you have this nice medium of exchange that if it has a finite supply can appreciate in value and give you some prosperity, which is why I believe in Bitcoin and why I believe Bitcoin is a future asset. But I can't possibly see the stock market falling below this area. And even if it falls all the way down to here, the opportunities to buy this shit on the cheap, yes, in US dollars, because the stock market is still priced in US dollars. And contrary to what everyone says about the US dollar, the world can't get enough US dollars. So when I go to the DXY chart, I don't know what the dollar did today. I'm actually very curious myself. when I look at the value of the US dollar fell today, but the desire of the world to acquire US dollars is still high. The US dollar is not going into hyperinflation. But if the US dollar devalues, it only helps the stock market because the stock market is priced in US dollars. I don't want to look at coronavirus charts today, but maybe I'll take a look at them over the weekend or something. I see the question though. Okay, so I want to look at gold now. I'm curious if it fell or went up. So gold fell today. Now gold still is on its breakout pattern. Now just like Bitcoin, I believe that gold will not fall below this low, even though I think the S&P 500 can fall below this low, because I think that the early correlation was strong, but the future correlation, now that the stock market has already lost the majority of its value in this downturn, I think now people are going to run to some form of safety. I think at this point, those people are going to look for where can they protect their money. And I think at this point, they can actually protect their money in assets like Bitcoin and gold. And that's why I think that they are actually going to be okay. Let's go back in gold. This is the daily chart of gold. Let's throw gold on a monthly chart. And let's go to the 2008 financial crisis. Okay. Here's the 2008 financial crisis. Now notice that gold tops with the stock market. But look where the bottom in gold is. The bottom in gold is in October of 2008. And I actually did not know that. I just assumed based on my hunch. I almost want to go to the weekly chart to see if it was early October or late October. That doesn't matter. October 2008. I know when the bottom was in the stock market. The bottom of the stock market was in March of 2009. So October, November, December, January, February. Look, gold went up 47% while the stock market was still falling in its final wave, that final wave of the stock market. I actually had no idea I was going to go on these macro rants when I started this video. Completely unplanned, guys. So now if I go back to the stock market and I go to the monthly chart, I guess we can stay with the Dow. No, we'll do it. We'll use we'll use the Dow. I'll go to the monthly chart. If we go to that 2008 period, right? Remember, gold crashed big time with the market. Gold tops in like January 2008. So gold was still rising. Gold crashed late. It crashed hard. But right here in October of 2008, gold bottomed. So while the S&P and the stock market was making that final capitulation crash, those final 3 to 4 months of the crash, people were already looking to diversify into safe havens. When those safe havens have also crashed, but like I'm with them. I don't believe Bitcoin will fall, especially with the halving coming, right? So to me, Bitcoin but probably even gold now become safe havens because I don't believe gold or Bitcoin will go past these lows. Like these lows are these lows. The market will go lower. Well, I shouldn't say will. The market has very high probability of going lower, but I don't believe neither gold nor Bitcoin nor like cash, like the dollar. Same thing. I think the dollar has just become a safe haven. I don't think the dollar is going to go lower. Like, I don't think the dollar is going to go lower than this. I think there's going to be this final capitulation of people leaving the market because they're scared, they're going to now put their money into safer assets like gold, like Bitcoin, and maybe even oil. Though I really want to see oil make a new low. So I'm not sure about oil. Okay. So I hope that kind of explains my logic right now and why I am very nervous about the stock market. But at the same time, I am very, very bullish on Bitcoin. Very bullish on Bitcoin. Today did not scare me in Bitcoin, but it scared the shit out of me in the stock market. Okay. I kind of want to end it here, guys. I don't want to look at individual names. I think the market's going to drop. So all those names I was looking at to time the low, to time the dip, I think I'm going to get that dip. I currently have short exposure in the market, which means that tomorrow, if the market goes down, I will be more profitable by the market crashing. I still have some puts in the S&P 500. I only sold the calls. I did sell both my calls and puts on NVIDIA. Kind of regret selling those NVIDIA puts, but oh well, because I sold my NVIDIA puts here thinking we're going to go up, and then I was going to sell my calls up there. I ended up selling my calls down here, which is still a better deal. But unfortunately, I'm not as I don't have as much exposure to the downside as I wanted. But the market is so unpredictable. I had plenty of exposure to the downside going into Monday, and you saw what happened. So I am skewed to the downside going into Wednesday, and we will see about Thursday. Everything will change. Yes, I'm willing to look at TLT and the bonds. I believe the bonds will go higher. I believe bonds will be yet another. Oh, they dropped today. But see, look how the bonds rallied at the end of the day. I think that as the market falls, I think that TLT, it had a 9. This is, I think the 1 to 4 candle correction has ended, and I believe we are going to enter another countdown phase to the upside. I think the bond market is going to perform. I think the interest rate is going to drop, and I think there'll be some good chances to refinance your house, and I think the real estate market is going to puke out a lung. I think that the real estate market is in serious, serious trouble, and if you have some money saved, I think there will be awesome opportunities in the real estate market in the near future. All right, guys, I wasn't really paying attention to much of your live chat because I can't do everything at once. All right, guys, I think I'm going to call it a day. There you go. That's it for me. I glanced at gold. I think I glanced at all the major markets. I am curious. I'm not that curious, though. I did not sell my Bitcoin position. I did not sell my Bitcoin long position today. Maybe if I timed it better, I could have, but I did not. I'm just going to add more. I'm just going to buy every dip. I am buying every dip. I have a lot of counter trend indicators. People trade the opposite of me. That's great. I'm okay with that. I have 1,200 viewers right now. Guys, if you like these videos, you can support through affiliate codes. You could also, I don't know if I'm going to be teaching. I think I'm going to teach these one more time. I trade all day long now. I'm not going to do a follow the leader thing. I teach you how to trade. You make your own decisions. That's how we do it here. You can purchase any of these videos. Options is 15 hours. These are 4 hours each. There's also Hyperwave stuff. Hyperwave from Tyler Jenks. His old videos are for sale as well. Okay, guys. You can support. And we are going to go to Bali first week of November and Malta first week of October. I looked at all of those. And the last thing I want to look at, mining hash rate has dropped. I'm okay with that. We're about to get a little bit of a bump, like 1% bump, because the Bcash stupidity is forking. So there you go. I want to look at Bitcoin dominance. I think the final nail in the final nail in Bitcoin's bear market is going to be Bitcoin dominance breaking to a new multi-year high. When that happens, and I'm saying when, not if, when that happens, we are back on track for a full-blown bull market. I'm starting to pick up Twitter followers again. I'm picking up over 100 Twitter followers a day, which is what was happening in late 2016, going into 2017. A lot more interest are coming back into Bitcoin. I bet you if you do a Google trend on buy Bitcoin, it's going to start to slowly look better. People are still scared, and the more scared they are, the better. I'm really curious what the BitMEX funding rate looks like. As you can see, the BitMEX funding rate has just gone positive. That favors the bears ever so slightly. And I do think we're going to pull back, but I don't believe we're going to go past 6150. But if you really want to play it safe, like I did in my tweet, 6,000. 6,000 is the line in the sand there. All right, now I am done. Thank you so much for watching. I think this was a very good video, if I do say so myself. Now I got to remember how to end the stream. Well, first I got to stop the screen share. Thank you guys, and always remember my shirt. All right. Bye, guys. Talk to you all on the next one.